This is Alfred Edmonds, Senior Vice President, Executive Editor at Larger Black Enterprise, and you're here with me for Your Money, Your Life, our podcast focused on financial wellness, all things financial wellness, and how that impacts your life. And today we have a great guest, Tony Elion Jr., the author of Sailor to Student, a successful individual investor, who's going to talk to us about the financial wellness things you need to be considering if you're going to become an individual investor, someone who starts to buy stocks individually. And his book is a really great book, but he has some great insights into what you need to be thinking about before you do that. So, Tony, welcome to Your Money, Your Life.
Hey, thank you for having me. I'm definitely glad to be here, and I'm ready to rock and roll.
So let's start with explain to our audience your story. Share your story that led to writing the book and led to your experience and success as a stock market investor.
Okay, so quick story. I graduated from college, as most people do, and I thought I was entitled to certain things. I thought I was entitled to, a house and a foreign car and all of the new furniture, all of these things that say, you've made it. And I kind of dug myself into debt, where now I had a mortgage and I had a second mortgage because I got two condos. Then I turned around and I had a foreign Mercedes, and I'm paying, $750 a month in that. And it got to the point where I was working 7 days a week. And I said, I can't do this. So I decided to dig myself out of that debt by going into the military. And because if you go into the military, they're going to pay your bills plus give you a paycheck. So I rented out my condos. I sold the foreign car, got rid of, all of those things that were tying me down financially. And I slowly, made my way up with my bank account. But the money was sitting in the bank account. And I said, wait a minute. I need this money to grow. I need it to get bigger, because if it's just sitting there and it's getting 1% interest or less than 1% interest in a savings account, that's not going to help me in the long term. So I eventually went to law school, and I used my GI Bill to go to law school. And while I was getting my degree, the scholarships that the school provided to me came back in the form of a refund. So all of those refunds I just automatically threw them into the stock market. And over the course of 13 months, I grew my portfolio over $300,000.
Wow. And again, I'm going to show the book real quick. Sailor to Student, I reviewed it for Black Enterprise and recommended it. He goes into great detail with that story. But one of the things I loved about the book is, and we're going to talk a little bit about this, is the lessons that you learned as an individual investor, as a stock market investor, that went far beyond, I bought stocks and I made money. That you really used your book and your story as a cautionary tale, and to come up with a set of principles around overall financial wellness, about things you should have in place before you start, I'm going to buy, Amazon, or I'm going to go buy Zoom because of what's happening now. That you found out along the way that there are other things that you need to position yourself so that you can, in fact, take the risks that are involved in investing in the stock market. Talk about that and what some of your conclusions were as you came through that experience.
Well, as I was slowly, getting to the point where I wanted to buy stock, before I even ventured into buying stock, because at that point I didn't know a lot about how to buy stock. I didn't know what a brokerage account was. I knew nothing. I wanted to make sure that my foundation, my financial foundation, was good, because I didn't want to dig out of that hole again. So I wanted to make sure that I had insurance. I wanted to make sure I had health insurance. I had, at that point, renter's insurance in case there was a fire or anything like that. Make sure I had car insurance, so that any gains that I would make wouldn't be pushed down because now an emergency has come up. Life is going to happen. So I wanted to make sure those things were taken care of. Then after I made sure my insurance and those basic things were taken care of, I made sure that I was out of debt. I never in my life had a credit card. I'm not a fan of credit cards, and I'm not a fan of borrowing other people's money to, get to where you want to go. So I never again, once I got rid of that Mercedes, I never again had a car note. So it's been 15 years since I had a car note. I bought my car off Craigslist and I stuck with that. Like I said, I've never had a credit card, and I told myself that I would never again put myself into a mortgage, because I didn't want to borrow other people's money. If I bought a house, even if it's a $30,000 house and I have to fix it up myself, I was going to pay cash the next time. Because what I learned my first go around was, oh, I have this house, but by the time I pay it off in 30 years, I have paid for it 3 times over because I'm borrowing someone else's money. So I wanted to make sure that financial wellness was going to be what I stood on, so that once I got to the top of my financial pyramid and I'm starting to invest in stocks, if those investments go south, or if the market takes a dip, or we go into a recession or depression or anything, I'm not dependent upon that money. I have the opportunity to let that money grow and weather any storms that may come. So that was my biggest thing, to make sure I'm on sound financial ground before jumping into the stock market.
And so, that's why I wanted to have this particular conversation at this particular time. I mean, as you know, I reviewed your book several months ago, and talked about it several months ago, but now we are in that kind of a crisis. We've seen the hit to the stock market, the gyrations of the stock market that are likely to just continue as we work our way through what this is going to look like as a nation and as a world, because the stock market is impacted by global trends as well as national ones. And one of the things that's happening, I know it's happened to you, it's happening to me, is as a financial journalist, people are like, what stock should I buy now? Or should I dump it all, or should I jump in? Or what stock is a good stock to buy now that we're dealing with the coronavirus? And, and I'm like, first of all, I can't tell you, I don't know anything about you.
Right.
And 2, there's some other things you need to have in place first. Do you have an emergency fund? Well, no. Well, you can't afford to risk. So talk to me about, to people in the audience now who are, oh my God, there must be an opportunity. I must be able to jump into this thing now, and about some of the things they need to have in place before they even have that conversation.
Yeah. So like you said, people come to me all the time ever since, the book came out, and you're getting access to platforms like Black Enterprise. There are people who don't know me that will email me, and they say, exactly what you said. What stocks can I buy? What is there an opportunity to? Yes and no. Yes, this is an opportunity. But there's always going to be an opportunity. This is also an opportunity to make sure that, like I said, you're financially sound, because if you don't have that emergency fund, if you don't have that miscellaneous fund, like there are a lot of people that are unemployed, and at some point, those jobs that they thought may have been there may not come back. So you have to have a plan B, a plan C, a plan D. So I definitely caution people when they say, what stock should I buy? Once again, like you said, I don't know you. I don't know your financial situation. I don't know what you have going on. I don't know what bills you're paying, if you're paying child support. I have no idea about your situation. So I can't advise you on what specific stock to buy. And I think that would be, definitely dangerous for anybody who says definitively, because we don't have crystal balls. We look at numbers and we say what may or may not happen. But, if it was that simple, I would be a millionaire now. I would, So a lot of what I've accomplished, was definitely based on looking at the trajectory and kind of seeing around the corner of where the market is heading. But a fair portion is based on luck. Things could have definitely went south. And if things had gone south for me when I made my investments, I had plan B, plan C. I knew that there were other scholarships coming in every semester for the next 5-6 semesters. So when people come to me and they say, hey, how do I do this? Well, first, let's talk about, what you have going on. And then we'll talk about something that is very low risk until you get comfortable, until you have enough knowledge that you can make these decisions on your own, and you don't necessarily have to reach out to somebody like me. Because at the end of the day, I'm still a novice. I don't have a license. I don't have a degree in finance or economics. This was something that I decided to do for myself and to take a chance, because the people I saw around me, the vast majority didn't have $500 or $1,000 in the bank. And I was in that boat. And I said, you know what? We're doing something wrong. We got to learn some investments. So I'm going to try this. If it doesn't work, the worst thing that can happen is I'm going to be broke. I'm broke now. So I tried investing and it worked. And now I'm an advocate for investing, but doing it the right way.
Yeah, and I'm totally with you on that. The other thing that I want you to kind of speak on, the reason why you don't say, oh, it's COVID, I need to buy my COVID stock, is that you're investing not only money you can afford to lose, or it's better to say this, it's money you can afford to risk.
Right. Right.
And we're going to talk a little bit more about the difference between risk and gambling. It's not the same thing,
They're
but
definitely
you can
not.
afford to risk, and you're not looking at what's going to happen in the short run. We're in a period of uncertainty. What can you invest in that you think 5, 10, 15 years from now will still be relevant, because you shouldn't need to get access to that money for at
Right.
least 5, 10, or 15 years. So talk about this whole short-term thinking. I'm just going to get this stock and make a killing, versus the mindset of a successful investor who understands that for the most part, stock market investing is a long game.
Well, I heard a quote one time, and it said, the stock market loves personal donations. And, if you want to hand your money over to the stock market and not do your due diligence and say, well, I'm going to focus on this short term because COVID-19, someone reached out to me recently, and they said, how do I find out what companies create the thermometers?
Mm-hmm.
Because it's going to be big. That's the wave of the future, because we're seeing on TV every day. And I said, one, I don't know the answer to that, like who creates those. That's a Google search, but two, you have to look beyond just this COVID-19 situation. There's going to be a point when things go back. Maybe is there going to be a new normal, but the pharmaceutical companies that may be riding really high right now because there's speculation about a possible drug or vaccination. 2 years from now, those companies may not have anything going on, and that stock has fallen tremendously. Whereas a company like Amazon, we have seen the value of Amazon pre-COVID-19. We have seen the value of Amazon during COVID-19, where people can't really go out and they want things delivered. And we're going to see it post-COVID-19. So that's Netflix is a company where we saw the value coming up. And now, if I can't leave, I can still be entertained. These are companies where we're going to look at the long-term effect of what they have to offer as a business. And I think while there are buying opportunities, you have to be very careful in the money that you invest in companies if they're reactionary, if what they are doing right now within this environment, because when this environment is no longer here, how are they going to perform? So I always caution people to do your research. Investing shouldn't be something where you're looking to make a quick buck. If you want to make a quick buck, I can guarantee you that the Powerball and the Mega Millions are being sold every day at your corner gas station. But if you want to invest and grow serious wealth, over the long haul for you and your family, you have to do your due diligence if you're going to be talking about investing in stocks, especially if you're talking about creating your own portfolio and not using something like a mutual fund or ETF or index funds.
Again, one of the reasons I love your example is, as you said, you're not somebody who a stockbroker or you went to school for finance, or you're a regular dude who, like you say, get to college, get to the military,
and has lost money in the stock market.
And lost money.
A lot of money.
We're going to talk about risk and as well. Yes. But that one of the things that came through in your book, and it comes through in my conversations with you, is this whole idea that you got to educate yourself, that you constantly have to educate yourself. And that this is not, I bought the right stock, I went to sleep, and next day I was, next month I was there. That use, self-education is an important key to financial wellness, whether you're investing in the stock market or not. And I just, just share with me some of the things that you did along the way to go from zero knowledge to building up knowledge and getting information and resources that you use to become smart in terms of the risk that you were taking in the market.
Absolutely. Before I invested a dime in the stock market, and when I was in the military, I sat down, we have a library on base, and I would go to the library and check out books. The first book I checked out was Personal Finance for Dummies. So, the For Dummies series. And it broke it down. And that's where I learned about financial wellness way before investing. So it taught me, you need to have your ducks in a row. Investing is the last thing you need to worry about. And it also taught me that investing has to be redefined. You have to reshape what you think investing is. So for me, there were many, many years that I missed out on the compound interest that comes with pouring into your retirement. People don't look at, their 401k or their IRA, or if you're in the military, the thrift savings plan, the TSP, they don't look at that as an investment. They look at that as, oh, that's 40, 50 years down the road. You need that time. Time is your best friend when you're dealing with retirement, because you have the compound interest and the money can grow on top of itself. So especially if you're in a company where they're matching you, dollar for dollar up to a certain percentage, you're leaving money on the table. So that's an investment. So the first thing I did was to open myself up to the library. It's free. Go to the library, check out some books. Then once I started to read, I used the internet for a resource. There's a lot of good, videos on YouTube. There are a lot of good things that you can watch as far as social media. So I follow Black Enterprise. I follow CNBC. I follow Yahoo Finance. I follow Market Watch. I follow Bloomberg. And as you're scrolling, because a lot of us are on social media a lot, and as you're scrolling, you'll see things will pop up in your news feed. Oh, this is going on. Or, the China deal didn't go through. Whatever is happening in the world of finance and money, investing and wealth, you can see little tidbits of it. Let those seeds be planted. And the last thing I did, as I tried to learn more and more, I got into good groups on the internet. So one particular group I like on Facebook is called Black Stock Investors. And I joined, and I, sit back and I would read what they're saying. And then I would go research and see if it was true, or, I'd click the links and I'd read the articles, and oh, this is where I'm learning more. And now I have a community of people where I can go and ask questions. Hey, what does this mean? What should I do with this? How does this affect this? What are options? What is Forex? What is cryptocurrency? And now they're pointing you to different directions. Go to Investopedia, and so you become more and more knowledgeable over time.
Investopedia is one of my all-time favorites.
I love it.
People like, because again, I don't come from a financial background. My financial education began when I joined Black Enterprise. It was like, if you're gonna make it here, dude,
you gotta know
the business financial publication. You want your career to keep going, you gotta educate yourself. And Investopedia is, is one of the sources I always recommend to people, because it breaks it down for you. Like I said, it's just, okay, here's what it is. Here's how to use it in a sentence. It's just really, it's really simple. Talk to me a bit also about the importance of financial wellness. I love how you said it. Financial wellness comes first, and then investing comes afterwards. But the financial wellness puts you in a position to deal with the risk that all investments entail. And certainly stock market investing entails. So talk to me more about that whole idea that you said it to me on a call when we were preparing for this interview, that what you realize is that everything is an investment. And if you look at everything as an investment, you'll make better decisions about what you do with your money overall.
Absolutely. And I unequivocally believe that everything is an investment. Right now, there's an investment going on in the time it takes to do this interview. There's an investment when you decide, okay, I'm going to drive an hour to work and an hour back. You're investing time, you're investing energy, you invest when you go to the gym. Everything you do is an investment. Now you just have to decide how much do you want to invest. So
what are you getting back? And what are you getting back?
The return on investment.
Yes.
We all are investors. You are an investor by nature. Like, you're born into investing, but you just have to determine what's the return on investment, and how much you want to put in, what's going to be, the risk that you're going to take. And I want to say this, that when it comes to my philosophy and my strategies, oftentimes I'm going to say at least 8 out of 10 people that I talk to do not like my strategies, and they do not like my philosophy, because my philosophy deals with financial wellness. And in order to have that, you have to have 2 things: self-discipline and delayed gratification.
Say that again, bro.
In order to have, the financial wellness, you got to have 2 things. You got to have self-discipline and delayed gratification. So when I start to tell people, especially when they come to me and they say, okay, this is what I have going on. I say, oh, okay. So first of all, you have a $200 phone bill. We got to get rid of that. All right. If you want to have money for investing, you're investing right now in this phone bill. My phone bill is $35 a month, and it came free from one of the local phone companies. It's a regular smartphone. They said, you want an iPhone? I said, no, I'll keep my phone. I don't need to waste money on those other things because that's my investment money. This extra $100 a month, well, that's at least one share of Starbucks. I believe in Starbucks. I've been around the world. I see them growing. So I can buy one share of Starbucks every month for 70, 75 bucks, or I can pay it to you and get nothing out of it. At the end of the year, I have 12 shares of Starbucks in my portfolio, So lots of times when I sit down with people and we talk about that financial wellness, some of this stuff you got to cut back on. You want to go to the barbershop every week and pay $25 a pop and then tip them? You're not living like that. You got to cut this budget. I don't go to the barbershop. I cut my own hair. It may not be the best, but I save $100 a month. That's an extra $1,200 for investing or putting into my retirement or making sure that my insurance is paid or whatever the case may be. So lots of times people don't want to adhere to the things that I say because it requires them to be uncomfortable and it requires them to get out of their comfort zone. Now you're going to have to make a decision. Lots of people want to be investors, but you want to be consumers. I mean, you're going to, I talk to people about forms of income and, where you have passive income and things like that. And I was like, either you're going to be making money or you're going to make money for somebody else. That's just, it's binary.
Right.
So those, I don't know, financial wellness is so very key and so very important to the way that I look at life and how I've been able to dig myself out of debt to remain out of debt. And it creates a total sense of freedom where I can now determine where I live. I can now determine where I work. I can now determine, what schools my children go to because I have financial freedom. And it came from having financial stability and practicing financial wellness. And then once those things are grounded, now we can focus on investments and growing from there.
You said something about this idea of, people say to me, I don't have any money to invest. How do I get money to invest? And I tell people there's two kinds of poverty. There is real poverty. There's a poverty of absolute lack. That they literally just have enough money for basic needs. Like if they could get a roof over their head, access to clean water, and enough food to get through the day. And there's some of that still in America. So it's obviously more prevalent in other countries, but even in America. So I said, there is such thing as poverty. And I came from a relatively impoverished background, but not that kind of poverty. Even as someone whose mother raised him on public assistance, I knew I was going to have a meal every day. I knew where I was going to sleep, But I said, so there is such thing as poverty. But most of the poverty that we're talking about is consumer-driven poverty, as you said. Yeah. I don't have money to do this. I don't have money to invest. I don't have money to start a business because I am spending my money on these other things that make me comfortable today, even if they won't get me what I want tomorrow.
Right.
So talk some more about that. Even the realization you as a younger man, you matured along this process to starting to make decisions about, do I want a Mercedes on the front end of my life that I really can't enjoy and really afford? Or would I rather have financial wellness so that if I decide to buy a Mercedes later in life, I can own it outright and actually enjoy it without any stress?
Right. Like what I found was that there were a lot of people when I worked at different places. I've worked at UPS, I've worked at Amazon, I've worked at, in the military. And there were a lot of people who were shackled to the job because of their financial situations. And I was one of those people also until I decided that some of this has got to go. I'd much rather drive a car that's 20 years old and not have a monthly payment than to have to work 50 hours a week just so I can make the monthly payment. I'm not even being able to enjoy the things that I'm, purchasing. I have a home, a beautiful condo, and I have the Mercedes, and I have the new furniture, and I have the timeshare, but I'm working 7 days a week. So what's the point? So once I decided, and I looked around at the people, I said, the people that I'm seeing, they're addicted to consumerism, consumption. You know, most of us don't want to be uncomfortable. And when you say a person who has been working for 10 years, 20 years, 30 years, and you don't have $1,000 in the bank, I don't mean this in an insulting fashion or to be disrespectful, but something is not right. We have to reshape the way that we're thinking. You know, it's equivalent to a person who has been, overweight for 50, 60 years. Is because you can't continue to eat the pork chops and the hog mogs and the chitlins and the potato chips and never go to the gym, never drink water, never, like, you have to change some of these habits. And for a lot of us, I do understand that there are things that are passed down. Whenever I do a financial workshop, the first thing I begin with is, how many of us speak Mandarin Chinese? Okay, how many speak German? How many speak Arabic? And usually I'm in Black communities, and I know that's why I put the question that way. None of us speak that. Why? Because our grandparents didn't speak it and the parents didn't speak it. So they can't teach you what they don't know. So a lot of our dietary habits, a lot of our financial habits, a lot of the habits that we have in far as consumption come from the people who raised us, but they didn't know any better. So it's on us to break the cycle. We have to do things that are going to change so that when we have the next generation and the generation beneath that, we can break the cycle and teach them different ways. So now, I drink smoothies and I do all of these things because, I've learned, this is how you take care of yourself. Diabetes is a real thing. Heart disease, hypertension, all of those things. And it's the same for finance. You can't go get your hair, nails done every week. And it's just not sustainable. If you want to, fine. But I would encourage a person, before you did that, to either figure out a way to do it yourself or to save that money and open up your own shop.
I love the comparison between financial discipline and health discipline. I'm passionate about both of those things in my life because you said it earlier, when people come to me and say, listen, you got six-pack abs at your age, and I want that. How do you do that? How do you do that? And like you said, 90% of the people, after they hear what you got to do,
they don't want to do that.
Same thing. Delayed gratification. Guess what? It's not going to happen in 3 weeks.
Mm-hmm.
It's not going to happen in 3 months. I've been doing this for years to get to this point and to maintain it. And it takes discipline that, guess what? I love certain foods. I'm a big pancake dude. I love pancakes. Guess what? I'm not having pancakes every day. Right. That's like a once every 3 months treat to go out with some pancakes because I understand what the result might be. So you do a great job of from a I won't say a layman's point of view, because from your own experience you're now an expert, but you're not somebody who's like, I got a finance degree and I worked on Wall Street and I worked for Merrill Lynch or JP Morgan Chase. You are like most Americans. You're just a regular dude who has come to some realizations about what you want your life to be like, and then the lifestyle choices, because financial wellness is a lifestyle. I'm talking about investing is not a lifestyle.
Right.
Financial wellness is a lifestyle, and you have adopted that lifestyle. Talk about the process.
Because one thing that I realized, especially while I was in the Navy, there were people who were officers that were making six figures and were living check to check. So money is just a resource. It's not about how much you make, it's about what you do with the money you make. So there are people out here that are living check to check that make $9 an hour, and there are people living check to check that make $175. There are lawyers out here, because what happens is when we get an elevated status, and I have just graduated from law school, when that status elevates, we feel like our lifestyle has to follow suit. So now you just got out of law school, and yes, congratulations, you're making $150,000. But now you bought a $500,000 home and you bought a $100,000 car and you're still paying off your student loans. You're going to be in this cycle of debt for the next 20, 30 years trying to pay it off, instead of being, having that self-discipline and delayed gratification that says, no, my car still runs fine. Or, you know what? Yeah, I just graduated law school. but I'm still going to get a 2-bedroom home with a roommate so we can cut some of these bills. I don't want to, spend all of the money that I have coming in on things that either depreciate in value or they don't have a return on the investment. So I always tell people, if you can just hold off, whatever you're doing, whatever that you enjoy, because I would love to go get my hair cut. Oh, like you said, once a week and had a fresh lineup. Oh, that would be nice. I'm like you with the pancakes. I get a haircut maybe twice a year. So it's, if I have a photo shoot, or there's an interview, like something, and I would have gotten a haircut for this one, but everything is still closed up in here in Pennsylvania.
Yeah, you look good though. You look good.
So I had to cut it myself.
The game is tight.
Yeah, it's that delayed gratification. And once again, when I start talking to people, they want to know stocks. They want to know the get rich quick. They want to know, what's the elixir? How can I do this and make, because lots of times the things that are, how do I put it? The headlines for what I've done, they're very misleading, but I'm not the one generating them. The people at these companies, they generate them, and it'll say something like, veteran goes from $53 to $300,000 in 13 months. And it's just like, that's a part of the story, but what you're failing to realize is that it's not that simple. Like, there was so many things that came into it, but that helps to, get eyes on their publications. But if I could turn $53 into 300,000 just like that with a snap of a finger, I would be a millionaire,
Many times over.
Exactly. So people have come to me, hey, I'm gonna give you 53. Can you turn my 53 into 300,000? No, I can't. Like, there were some things that fell in my favor, and we were in the middle of a bull market and things were rising. Like, there was a lot of things that were happening that aren't happening right now. Now we're, in a recession. Well, I think it's a recession. I think we're headed that way.
Right.
So I'm sorry. I go on.
No, you're absolutely on point. I mean, one of the things I appreciate about even how you titled your book, again, you know me, I read tons of books. I complain about it sometimes on Facebook because some of them are just really not well done. But I love books so much, I try to read them anyway. But you didn't call your book How I Made $250,000 Overnight.
Right.
That would have sold a lot more books.
Right.
But you called it From Sailor to Student, which to me underscored the most important parts of your story, that you're a regular guy, military guy, and you got to where you success in the marketplace by studying, by learning, by absorbing information to educate yourself so you can make some good decisions.
Right. And we wrestled with that title for a long time. Like, that was the last iteration of it because we didn't want it to be misleading, but we also knew that if you put sailor to student and you don't put anything else, people won't buy it. They need to see your results. We're going to use that health analogy again. If we turn around and we see a person who was 450 and, how, sailor to fitness person, but we just show them at 450, people aren't going to buy it. They don't see the before and after. So in order to hook people, we had to change that title and say, okay, we got to put a number in here. All right, let's put this number. Let's make it as non-misleading as possible. And once they read the story, they'll see, oh, it wasn't just a light switch. It was a situation of this happened. Oh, money was made, money was lost. There was plenty of sleepless nights. And after you made that money, you still had to pay $40,000 in taxes. Like, there, you have to learn that there are short-term gains, there are long-term gains. This is a big operation. There's a lot going on here. And you have an opportunity to use your story to teach other people what is possible. And, that's definitely what we wanted to do.
So you made very clear in your book, you need to have an emergency fund.
Absolutely.
You need to have some retirement savings.
Absolutely.
You need to have other types of investments, that will sustain you in the short run and the long run. So when you decide to make that quote unquote bet on Zoom, you can afford to make the bet, because if it doesn't go right, your lifestyle is not going to be disrupted. And you spend a lot of part of the second half of the book talking about the groundwork you laid, the foundation, as you said, so that no matter what happens in the market, you may not be happy that you lost, $50,000 in a market, but you're not going to, it's not going to kill you. It's not going to put you out on the street. It's not going to, So
Right.
talk more about your ability to lay this foundation of financial wellness so that you can afford to take the risks that will allow you to make a lot of money in the marketplace over time.
Right. When you and I talked previously, and you were telling me about Roland and the 50%, that's it's one of those things.
Diversification, right.
Yeah. So it's one of those things where I didn't even realize I was doing that, but this, to make it simple, like grandma said, don't put all your eggs in one basket. All right. So if you have a job that you're working, boom, 50% of your money is coming there, and you want to diversify as much as possible. So yes, when that job that you're working offers you, money for your 401k, we got money here. So the retirement is taken care of down the future. So we're looking at money down the road. Now, if we have money in our emergency fund, that's in case something happens. And lo and behold, nobody saw a pandemic that would shut down the world. Something has happened. Life will always happen. It may not be in the gravity of the entire planet shutting down. It may be your plant that you work at that is shutting down. It may be like with Black Enterprise where, okay, we're switching from print to a more digital. Life happens and life constantly evolves. So you want to make sure that I have this 6-month emergency fund just in case, because, the water heater went out. I need new tires. The kids have an event that they're trying to go to at Disney World. They won a championship. Now they want to go celebrate. I don't know. But you want to make sure that those things are taken care of. And like I said, your retirement's taken care of. And by the time it's all said and done, now we can get to investments. The investments could be anywhere from a 3 to 7 year window. Well, it depends, because you might say, all right, I'm gonna do a low risk investment such as a CD. We'll say the CD matures in 2-3 years. Okay, fine. It's not going to have as big of a return, but the risk is lower and it's almost guaranteed money. So you want to have a diversification where I know I'm putting my money in proper places, and if they swipe the legs from under me, this $50,000 that I lost, it's not going to make me go bankrupt.
Yeah, I'll just be upset for a day or
two. It's going to hurt. Trust me, I have lost tens of thousands of dollars, and it hurts. Like it hurts, but you live to fight another day.
And that's the point, to be able to live to fight another day.
Yeah.
So let's as we wrap up the conversation, let's talk particularly about your mindset and what you think is a healthy financial wellness mindset in a COVID environment where a lot of people are really suffering. Let's take the health part aside, yes, but they're also suffering financially. I'll say this: some people are suffering more than others because, or some people are suffering less than others because they have some financial wellness in place. Right. They're like, okay, yeah, I'm not getting paid, or maybe my hours got cut, but I did have some things, so for emergency funds set aside, and I'm taking care of some other things so that while I'm hurting right now, I'm not devastated right now. So I want you to talk a little bit about that, but also about what should be the mindset of a person who says, either now or when we come out of this crisis, I'm gonna really start getting serious about becoming an investor.
Well, this time, a lot of us, not all of us, because there are essential workers who are on the front line and they're leaving their house every day. And blessings to those individuals. Amen. For those of us who have the luxury to be able to, sit at home, and if you're not dealing with the kids and doing things like that, if you're just trying to find something to do, this is a great opportunity to learn, because people will come and they'll say, I have $200. What's the best thing I can invest in? Me, I say books. Like, I would not put that money into stocks, because I don't even deal with penny stocks. That might be great. You might make I don't know, but my money would go towards books. There are so many books that you could read, and you buy them used on Amazon, $19, $20, $15. And that way you have the knowledge for when you do sit back and you watch a CNBC or you read a Black Enterprise or things like that. Because one of the things that turns people off about investments and wealth building and things like that is the unfamiliarity, the lack of understanding when it comes to basic terminology. But what you don't realize is that the more you do it, they're saying the same thing over and over again. It becomes, oh, it's like, when they were kids and they play double dutch, there's a rhythm to it. And now once you're in there, I understand what they're saying. So, they're talking about annuities, or they're talking about a limit down, or they're talking about a buyback, or there's an earnings report coming out today. They're saying that, the same things over and over again. You just have to familiarize yourself. And during this time is a good opportunity for a lot of people, not all people, but for a lot of people who don't have much to do, to jump on those YouTube videos, to go and read Black enterprise articles, and to watch videos and things like that, and to look towards the future and what's going to be on the opposite side of this. For example, Grubhub was in talks with, I think it was Uber, about, Uber purchasing Grubhub. Amazon has been in talks with AMC about purchasing the franchise. These are things that you should be looking at, because when we're on the other side of this, how is it going to look when Amazon, who already creates their own content, now has an entire movie chain to distribute it? That's a buying opportunity, possibly, so look at things like that. And also, it's sad to say, but I think there's going to be opportunities to jump into real estate. Because there are going to be, unfortunately, a lot of people who are going to either lose their businesses, who are going to lose their jobs and things like that. And the foreclosures are going to go up. We haven't really seen it yet. Unemployment, I think they came out with the numbers at 2.6 or 2.8 million today of new people who have applied for unemployment. So, if you have that money where, for example, that delayed gratification, now you've been stacking your money, waiting for an opportunity to invest. Real estate is an investment.
Absolutely.
For me, I don't have any stocks right now. I don't have any stocks. I liquidated my entire portfolio so that I could purchase a home. And I bought my home and I paid it in cash. No mortgage. I told you, I said, once I got rid of those homes, if I ever bought another one, I would buy it outright in cash, because I didn't want to spend 30 years paying interest to someone for letting me borrow their money. So now, for the rest of my life, I never have a mortgage. I never have rent. I never have any of these things. So I switched from stocks into real estate. I will always have a love, affinity, and appreciation for stocks. And once I, decide to get back into the stock market, it's going to be, I know what I'm doing more now. But like I say, I think people should look at alternative forms of income, real estate, annuities. I think people should also be looking at stocks that are low and that they might be able to purchase and it doesn't break the bank. There are a lot of airline stocks that are below $20. So if you, gave $100 and you got 5 shares of Delta, if it goes down and it never recovers, you lost $100. It's not going to break the bank.
You're talking about an industry that, I know the whole thing about banks being too big to fail, and that didn't work out so well with the last recession. But the airline industry in general is an industry that can't be allowed to shut down.
Absolutely.
Like, there's some individual company, airlines going in and out of business, but the economy, the global economy, can't operate without airlines. So you're right. If you're going to think, okay, we're still going to be relevant
After,
no matter what happens,
mm-hmm.
for the most part.
Yeah.
Airlines
So you have companies like all of the airline companies, and Boeing. Boeing creates the vast majority of airplanes that are out there. And right now they are around $130, $140 a share, off of all-time highs of above 400. So once again, it's the planting of the seed to grow in the future. We're talking 4 or 5 years from now. Where are we going to be 4 or 5 years from now? And that's what you have to prepare for. That's that long-term strategy. If you're looking at buying Boeing today, for example, and it's $130 a share and you buy 10 share, and now you're at $1,300 and it drops to $80 a share. Don't panic. That's a part of it. It's called an unrealized loss because you haven't realized it until you sell it. So, I think there are a lot of good opportunities, but the best opportunity is going to be to stack your money if you have it, and to read and gain knowledge. I can't emphasize that enough. If any of my family or friends are watching this, before you email me or message me about what to buy and what, you have to, because I don't have some blue pill that I can give you that's going to make you a millionaire. That's not how it works. I can give you
You're talking
knowledge,
about
but
stack your money if you have it, but I want to reiterate one of the earlier points. Assume that you have it, but it's
absolutely.
being put someplace else. And then look at all the things you spend on, even some things you consider necessities, and say, can I stop spending on that, or can I spend less on that? And even if I do nothing but get the Robinhood app or get Acorns or something, to know that this money I'm pulling from my weekly haircut that I'm going to turn into a monthly haircut. Yeah, I tell you, it's not all about just literally choking yourself off, but looking at what you have and saying, how can I reallocate to something else? And I'm going to lead that to another point. Let me say this. I wish I had your book 40 years ago because
I wish I had my book.
because I know what you're saying, man. I mean, I'm older than you are, and I'm like, I love my house, but I got a mortgage. And a big part of my life is, okay, how do I plan my life to make sure I can maintain this mortgage for this house that I want to keep? Mm-hmm. And if I had your book, I'd have done it totally differently, 20, 30 years ago. Right. But the other big piece of advice, when people ask me, what's the biggest piece of financial advice you wish you had followed when you were younger? And the one I have, and I'll ask you what yours was, mine was, I wish I had banked my raises. Bank your raises, meaning you talked about how when you get a promotion or you get a raise, you get a new job, you elevate your lifestyle to spend the money you got from that right away. Like, oh, I'm making more money. And you think that means an elevation in lifestyle. And a good friend of mine said what he learned to do early on was to bank his raises, meaning if he got a raise or he got a bonus, he would not spend that money for a year. He would live on whatever he's living on before he got that raise for a year and use that year's worth of increase for investing. Right. And then after a year, he said, okay, now I'm going to relax a little bit. But he still got that full year of increased income to invest. And that's how he built his portfolio over time. And this person, I mean, he's not a blue collar worker, but he works at a casino. He's not like Mr. Financial Executive at a media company like I am in New York, trying to play Big Willie. He's a regular dude that was a dealer at a casino and eventually became a chef at a casino. But he just said, no, every time I get a raise, I'm going to, instead of spending that raise, I'm going to bank and invest that raise for a year before I start living with that raise. And so I always tell people, bank your raises, at least for a year.
I'm going to take that. I'm letting you know I'm going to adopt that, and I'm going to put that into, my seminars, and because that's I love that. That's such a great idea. Huh.
Yep. But it's just about it's delayed gratification.
Exactly.
I'm eventually going to enjoy this, but let me wait a year.
Because if you've been surviving at that rate, continue.
Right.
Continue. So, so the question was my biggest piece of financial advice that I wish I had. That one of the things that I read in the book, Personal Finance for Dummies, was about the death of money. And I didn't realize that, even if you have $40,000, $50,000 and you sit it in, under the mattress, over time, it's losing value. So, okay, I have to figure out a way, if nothing else, for it to at least keep up with inflation. So one of the things that I wished I had known early on was the importance of compound interest and taking that money instead of just sitting on it, because there were so many jobs that I worked at that offered, retirement and things like that. And that could be rolled over. Even if you leave, you can roll it over.
401k and such things.
Exactly. But I never, I always looked at it, it's so far away, and I didn't understand the value of compound interest. So I think about the years that I lost, how much that money would have multiplied had I been putting it, because now that money that I didn't use then and I put it on something else, whether it was fast food or vacation or whatever, that money is gone. Like, I'll never see that money again. But had I put it in that retirement account, I would still be making money off of the hours that I had worked years ago.
That's one thing I did right. Black Enterprise, as a relatively small media company, we got 401k plans, I don't know, maybe 30 years ago more.
Wow.
And in the beginning it was matching. We couldn't sustain that forever after the 2008 recession. But no matter how bad things got, no matter what else happened, I was like, I'm putting money in my 401k.
Right.
Something's going in there, because how could, even without the matching, it's like, I need to know that when I want to chill someday, and chill, and I may never actually chill, but I want to know that I can live, that
Yeah.
this money's going to be there. And that wasn't my family tradition. My mother didn't work in corporate America. Like you said, it was not a language that was taught to me. But fortunately, again, I work at Black Enterprise, and I said, I need to take advantage of this. And there were a lot of people I know who had access to 401ks and similar products who, oh no, man, I need that money. I'm not giving that money away. Like, you're not giving it away. You're holding it for later.
Right.
Delayed
It's still your
gratification
money.
again. Delayed gratification again.
Yeah. And one more thing on that delayed gratification, as far as retirements go, please, if you listen to nothing else, if you have the money inside of your retirement, let it sit there. Like, if you're not 59 and a half, don't pull that money out for, oh, I want to get a new kitchen. I want to upgrade because you're going to have penalties, you're going to have taxes, and it dips into the compound interest. So one of the slides that I show, it shows how a person who puts the money in and lets it grow for the 35, 40 years, and the person who dips it and takes money out to buy a car or something, they never catch back up with the same amount that the person had put in that never touched it. So if you have the money, just put it in your retirement and forget about it, and you'll be thankful when it comes time for that retirement, to have something that has grown over all of those years.
So listen, in the time we have left, tell me about what's next for you. I know you teach seminars. I know you speak. I know you just finished law school. Congratulations. We already talked about the house, but what on this track of teaching what you learned to others is next for you? What can our audience look forward to in terms of what they can learn from you going forward?
Right. Well, I'm thinking about doing a new book and sticking with the sailor to student kind of theme, but we want to do student to investor and talk about how, go more in depth on stocks, but also talk about the transition from investing in stocks to investing in real estate and eventually investing in your own different businesses. So that's a thing that I'm looking forward to doing. I think I'm going to probably wait about another 6 months to a year and sit down and write that. But right now, as I graduate law school, I'm leaning a lot more into advocacy and community organizing. I spent my time while I was in law school working and teaching entrepreneurship at the local prison. So now as I transition from Pennsylvania down to Tennessee, I definitely want to connect with individuals that are incarcerated and those who have been released to help lower rates of recidivism. So a lot of my time and attention will shift from just finance and business into community building, because I enjoy teaching entrepreneurship. I enjoy teaching personal finance and personal, wellness. So those are things that I really want to devote my attention to, because as we know, Black attorneys are in limited supply. We only make up 4% of all the attorneys in America.
Wow,
So if
I realized that it was still that low.
it's so very low. And like when I went to law school, I never set out to be a lawyer. Ironically enough, I went to law school to get the money to invest. But now that I've been afforded this opportunity, I don't think that the universe gave me this because I'm such a great person. It's to help other people. So I want to take the knowledge that I have and the ability to break down legal concepts for individuals and work within my community in Memphis, Tennessee.
Well, we do a lot of content on Black Enterprise around prison reform and reentry into society.
Right.
A lot of our content, I think we have a video series called, what is it called? I can't call the name of it. It's something behind bars. So if you go to blackenterprise.com, you'll see it. But what you're doing makes sense because people don't always understand a big part of recidivism is people come out of prison and the doors to building a career, making money are either limited or closed.
Mm-hmm.
And then they end up saying, well, the only way I can make it is to go back to this life that I know where it's going to lead me, but it's the only choice I got. So we're big on this idea that you got to teach entrepreneurship, you got to teach financial wellness. You also got to reform systems that will allow them back into society.
Right.
But in the meantime, you got to find ways for them to support themselves and their families in such a way that will make the lifestyle that they left less a viable option. So I really applaud that's what you're going to do with both your financial wellness mission and your law degree, because it's desperately needed, especially in our communities. So thanks so much for that. It's great to hear. So listen, man, thank you for giving up your time to talk to us.
Yeah.
Wish you all the best. Just thanks, Tony, and I'm looking forward to more great things that you're going to be doing.
Absolutely. If any of your people want to follow me, I'm on Facebook, Instagram, all of those good sites, LinkedIn. So I'm there.
Yep. This is Tony Elion Jr., the author of Sailor to Student. I'm Alfred Edmond Jr., Senior VP of Black Enterprise, Executive Editor at Large, and you're listening to Your Money, Your Life. Thanks.